The bear market in oil, has it changed your view on the energy sector in equities?
We still feel that investors who have a long-term perspective, that we're definitely constructive on the energy stocks. I think for starters, we focus on the names, not the commodity, and a lot of these companies are still able to support very attractive dividends at current levels. If you just look at PE multiples are a little bit elevated, but on a price-to-book basis, the energy sector is trading at 60, 70-year lows relative to the market. And of course, in the near term, commodities could pull back a bit. Inventories are still high. I saw this morning OPEC compliance has been over 100%. I'm not really sure what that is.
Says, but they're gonna say it. They like that. But what we've seen, and this comes out particular, Occidental, for example, can achieve cash flow neutrality at 40, but they don't see a lot of growth. So, Burns, what wins for you? Is it growth, or is it just the fact you can survive at 40?
Yeah, these are a lot of players that, again, the prices are low, their revenues are down, but their costs have been getting reined in very, very, very gradually as well. And so they can be profitable. We're certainly seeing the ability to grow their dividends is really one of the things that we focus on as value investors.
So, Gina, Burns points out the compliance with OPEC has been very, very high. Is that good news or bad news? Because if they hadn't tried and it didn't work, then you say, well, you could try. Yeah. They're trying and it's not working. Does that make us more worried?
Well, I think it depends on what you're investing in, right? I mean, in terms of the broad stock market, energy is less and less of an impact on the broad stock market. So even though oil prices are falling, even though we have all these concerns about a supply glut, and oil prices are under some degree of distress, and energy stocks are struggling, the broad market is able to absorb that with a great deal of alacrity because energy stocks are only 5% of the market now.
So, Burns, what about that? Is that why we're not seeing it really radiate out to the market? The way we have in the past when energy's taken a downturn, it's really affected a lot of markets. This time it doesn't seem to be happening.
Yeah, I think that she hit the nail on the head. Is that energy makes up 5-6% of the broader market. It's down from almost twice that just a few years back, and so it has a lower impact. And likewise, I think that there are certainly some positives to that. The fact that the lower energy prices acts almost as the equivalent of a 2-3% tax cut on consumers, and so there have actually also been some positive knock-on effects from the lower pricing.